Hey everyone, this is DayTraderRockStar with a review of the 10 for 1,000 watch list from last week. I just released a new one for this week, going out for the week of February 14th, and was released last Sunday. So we're going to take a look back at it, explain why some of the setups work, why some are active right now. Although great, actually overall great watch list, everything pretty much triggered. And it's pretty much in play right now. We had 1, 2, 3, 4, 5 hit its target, and a few others are very close to that. And the Z and H is actually really set up and actually carrying over to this week's watch list too. So let's start off with a little Abbott Labs, which is on the thing here. And again, we put on the Abbott Labs on the thing because it's a good example of a falling wedge pattern. And falling wedge patterns, basically two converging trend lines coming down at an angle, which forms a wedge. There's a lot of ways of trading a wedge pattern, but the most profitable and the highest, high probability trade is waiting for the lower trend line to be touched on a pattern that's about 75% into the pattern. And that means if you trade a wedge pattern, you're looking at a pattern that's going out to a point. But you never want to watch a wedge pattern go out to a point. You want to see the breakout happen in about 75% area of the pattern. So you want it to go up and down, and then you want this move to come down here, usually to break out like that. So we're just about there. That's why there's a good setup here on Abbott. But again, Barron's came out, and we seem to be on top of someone's, on some good news sometimes that helps out the pattern. So Barron's an article over the weekend talking about Abbott Labs, and it should give it a little bounce towards the top of the trend line. So this is a very effective trade to the upside and still in play, and I think you could still get into that on Abbott Labs. Allstate. This was a textbook setup. We measured this one all the way out. This was just a nice little channel trade up. Pull back to the channel. Let's see where were we at here. It was a downward. Here we go. Let me just double check some of these lines here because we just established some of these new ones. There we go. Anyway, basically we came back down to the 200 period moving average, held this trend line, started pushing back up, then came back and retested it. Now this was the key here. As long as we retested and held that trend line, the 200 period moving average right there, and a recognizable pattern. Though the stochastics weren't in play, there was still three good indicators pointing to an upside follow through, especially because of this channel was developed. You're always looking for a test to the upside of the channel. Now, in this case, we didn't get exactly up to that level, but we came very close to it. We took profits into that move. Didn't hold into earnings, which pushed us back down, and actually bounced right off of that. So, you can see how the patterns continue to play out. BBD, this was a high probability setup based on, again, multiple indicators. The indicators oversold stochastics in a coiled pattern, which is even stronger. Pull back to the lower trend line, recognizable pattern is the channel, lower trend line, oversold, and a pattern there. So very good area down here, very good. And once you pull away from that 20 period moving average and 200, you get that spring back. It's a great trade. Right when you cut through the 200 here, you get a nice extension away from it. You always look for that rebound right back up, and everything pointed to a downward channel bounce. So this was also a trade that we just knocked it out of the park on. Dollar General is set up. This is this one which didn't break out yet, but it has similar characteristics to some of the ones we traded last week. LQDT. You can see this nice downward channel, coil stochastic, and the explosion out of this. And this was a great setup from 2 weeks ago. And again, it's just about a matter of this is basically one of the methodologies I trade with on the station all the time, and it's the coil stochastic channel setup. So that's very important to get that real bouncy stochastic. You don't want a flat line in stochastic. You can't read that. But the bouncy stochastic you read real well off the lower trend lines. Extension off of this. Underneath the 200 period moving average, bang right back up there. So that was good. So Dollar General is kind of set up like this. I do like the overall pattern. I do see this potential move down to 26, 26.50 area, maybe even a flush. All right. So maybe a possible pullback here, but there's a lot of support here. There's definitely a channel. You're on the lower part of the channel. You're actually a double bottom. Love it. This one's very choppy down here. Definitely going to be in play soon. We just have to, get the timing right on this one. Dollar General. ENTR here. This is another higher risk trade because of the price level, and it's a new stock. But a nice pullback. Got a nice little bounce on Friday. Some volume coming into it. Holding that upper trend line. Hold that lower trend line. Very tight pattern, and like I said, a little higher risk because of all these things, especially because we're not used to trading that stock. It's a new stock on my list. FDO, again, quality stock, pullback, buying into weakness, seeing the consolidation here, and just buying it perfect. It's just a perfect move here. Friday to Tuesday it made that bounce. We bought it on Tuesday, right when it broke out of that, hit the buy trigger. $41 was the buy trigger, and once we broke through that, we exploded. I took it off that same day, so it was a great trade. 3M, again, banging the table on this one. Just a basic ascending triangle. But what was key on this one, whenever you see something with strength like that, positive stochastic divergence, meaning stochastics pull back, sideways consolidation, holding the trend line, holding the 50-period moving average, and holding in the stochastic. So it was an easy setup here. It was a very nice one. Again, that one triggered. Got our profits off of that one. Took profits into the target on that one. SAPE, S-A-P-E. Still actually very nice. Again, this is old school me. Used to buy the breakout here. Now, after years of experience, I definitely always try to buy the lower support lines, the upward trend lines, and the combination of the indicators. It's just a low risk entry, very easy to get this part. Probably want to take profits. There's a chance, and people, other times you want to buy this breakout because it feels that you just get the momentum breakout of that, and a lot of people do that, and you can be successful doing that. So we'll watch this one. I still think you have a good shot of breaking out here. But sometimes you got to watch that breakout and a reversal back into the pattern. Sometimes patterns look so good, it's almost a trap. Safeway, off the watch list, also triggered out here. Nice channel. Stochastics were oversold. Definitely like that sector here because the whole sector was setting up. We were looking at other stocks in the same sector. And again, triggered. Price target $21. So it was just a breakout, this little consolidation. And the target was up at the top of the trend line here, and we pushed right up against that. This is an example of what I call a measured. You can measure and move. Well, it's a measured move target, but it's also measured move and a predictor where you can actually determine where the breakout's going to happen in a channel. So you take the width of the channel. All right, you take the top of the channel, draw a straight parallel line. Take the width. And just keep it equal to that and drag it across into the bottom of the one and the lower trend line come into play. And that's where you want to look for that breakout. So we are going to look for a breakout here on SWY this week. And the last one, which I do bang in the table on, I love this setup. Again, ZNH, China Southern Airlines. It's an ADR, trades over in China. Really beautiful falling wedge pattern, trend line support. Oversold stochastics. Everything here pointed to a bounce, and hopefully a nice bounce at that. 25. I definitely could see $30 or more on this trade. This is my trade of the month. I called this one for my February trade. I think it's a great setup down here beginning of February. Speaking about February, next weekend is the Traders Expo in New York City. And the Traders Expo is one of the biggest trading shows for day traders, stock traders, futures, everything. It's at the Marriott Marquis. It's February 20th. It's Sunday, Monday, and Tuesday. So I don't know what that day is. Sunday is, it's February 20th. So we're going to have a booth there. So welcome to come on by and, say hi. And I'd love to see you out there. You can actually sign up to get your badges on the site. It's a free sign up. You just get a badge. And they have other shows and stuff. You can go around. But definitely sign up through one of the links on the site, so we get some people coming in for the site, and maybe we get some sponsorship next year. So I appreciate that. And there's a link. There's a link for the Traders Expo on DayTraderRadio.com. So that's it for the that's the review, watch list review. I might get another watch list out if I can. The 10 for 1,000 watch list is out. It has some great ones. It has 3 best bets for the week. And again, that's kind of our membership package right there for that. You know, you get that special watch list sent out. For those out there in YouTube land, you get the week later review, which is nice because it's all good education. Either way, hope you enjoyed it. You can give me some feedback, and hopefully to see you at the Traders Expo. That's the Traders Expo down at the Marriott Marquis, New York City, Times Square, Sunday, Monday, Tuesday.